committee. Name is cancelled. Please. Recorded. Please can I remind all participants to speak clearly and remember to use the microphone. In addition, please speak directly into This will ensure your comments are picked up for the audio recording room. Please can everyone ensure that no electronic violent or entirely. In the unlikely event that it's necessary to evacuate the building, the fire alarm will sound. Marked. Exit sign. Do not use. Welcome to everybody, and timing's perfect, Mike. Really started. Apologies.
Yes, Chair, we've had apologies from Councillor Actwell, for whom Councillor Batho is deputising.
Thank you, Nancy. Closures of interest. Does anyone have interest?
As at the end of the agenda, where
thank you. Item 3, chairperson's announcement. Only one that approval of minutes. Meeting.
It's now a month since that meeting. Why is it?
Chair, they have been prepared. They're out for circulation with various officers. So that is their status. They need to be approved by the various officers, and I imagine with leave and what have you, we're just taking a little bit longer than normal. But it wasn't an additional meeting, so it wasn't due to be scheduled to be coming this for approval.
Sorry, but it doesn't explain why.
Well, I think it does explain why.
It explained the timeline, but the meeting minutes for something which happened 4 weeks ago will have been produced the next morning in draft form and typed up. Why is it taking 4 weeks to produce in a accessible form, even if it's only in draft form for members to see?
Chair, they were. Take the point. They are currently in draft form. The lead officer who attended that way, I wasn't in attendance at that meeting. The lead officer who was in attendance at that meeting has had unplanned absence in the period since. That's the reason why it hasn't been signed off as the final minutes. They can be shared with members as but we normally bring final minutes for signature to these meetings.
Tend with that. Item 4, to note the Audit and Governance Work Programme 23. 6. Do we have any comments? Godfrey.
Pass up this opportunity to complain about the paucity of this this work programme. This meeting we are this evening and the meetings on this list do seem to leave us with a very thin agenda. Last year we had a very full agenda for our work programme. I wonder what additional items we may expect to appear.
I actually profoundly disagree with you. Other than the September meeting, I think we have quite substantial items on the agenda to have a reasonably packed meeting. Those agenda items, five major items on November, 7 major items on March meeting. Yes, the September one is a bit short, and one of the things I'm going to suggest that we add to that is a discussion around risk management for those, particularly for those who attended the risk management workshop last week. There were several recommendations that came out of it, and I think we should have a discussion on that. Very specifically, the fact that we do not have a risk committee. This council will look at certain areas of risk management. That came up very clearly. Where that should sit, I think there is a matter of debate. It should be the performance panel or scrutiny function, or whether it's subcommittee of this committee. So I think that there's quite a bit of room for work on that, and I'm going to suggest that that is added to the work programme. I don't know if you have any other suggestions, Councillor Gobb.
Thank you, Mr. Chairman. The closer inspection of the internal audit progress would certainly be a welcome standing item. I know we're meant to be looking at those, but I can only see one quarterly report in there. I think the March meeting has only got one substantive item on there. The remainder are repeat items which are looked at each year and don't engage the committee's time substantially. I think we ought to be looking at least one, if not two, other items which the committee should be specifying for a particular interest. I tried to gain greater involvement in the committee in the assets, an audit of the assets and of this authority over the last 18 months, and that's always of great interest to me. I think that the administration's high priority of the dealing with the climate emergency is something which this committee should also be looking at as a particular interest in bringing together a number of different reports. And I'm surprised it's not on the routine agenda for this particular committee. I do think we ought to consider those.
I think yes, I take your points. I disagree again with you on the March one. I think the risk management policy itself is quite a lot of detailed discussion, and we do have a quarterly update and in for every meeting. Governance, which includes the internal audit, so that is in there. What I think we've got to be very careful of is stepping outside the remit of the committee. Audit and governance is about process. It's about making sure we have the right processes in place. Scrutiny is there for scrutiny policy areas. So both the climate emergency and asset management policies, I would suggest are a scrutiny function, not an audit and governance function. I think there are areas perhaps we can look at with asset management.
Yeah, on that point, we did agree with the previous audit committee that we would have an informal discussion with it was actually nominated, I think, Councillor Power and Councillor Godfrey on the asset the emerging asset strategy. That has been delayed. It is now to such a state where that meeting could take place, and we are anticipating organising that meeting in the near future, probably with yourself as chair of the committee. and Councillor Godfrey as well, as we have promised to do. Can only apologise it's taken till now to get to that position. But as you say, that would be to look at the process of the development of the strategy rather than the detail and the plans itself and that sort of thing. So certainly that meeting is still to take place.
Would it be possible to bring something to the September meeting? Because that is where there is certainly space on an agenda, notwithstanding to that.
That would certainly help the process and would be relevant for that meeting. So we could do that, yes.
In which case, Councillor Godfrey and I may beforehand on that, and then what delights we'll bring.
And that would be helpful for officers who are working putting all of that work together at the moment as well.
Okay, so that's a plan. Are you happy with that? Never going to be happy, I know. That's not your role. Right, we'll move on to. Let's just not used to having paper in front of me actually. Just put the agenda out. Item 5, participation. We have no members of the public here, no one's to speak, making this committee exciting enough. We'll move on to item 6, the external audit plans. Now that Mr. Souter has arrived, we were thinking of putting it to the very end of the meeting if you hadn't arrived, but able to keep the timetable. So, Councillor Power, do you need to introduce, or shall I just hand straight?
Very briefly, I'm rather aggrieved continuing hiding of time. This really does, in the old days, queries on audit out the way. They came back refreshed at the start of budgeting process. You know how much work we've got to do looking at the changes in what we do and how we deliver in this autumn, and now we're going to be tripping over audit queries as well. It just makes life so difficult for staff. Thank you, Chairman.
Mr. Souter, perhaps you can introduce the paper, but
Yeah, absolutely. I'm very much aware that the timing is less than ideal. We're clearly aware of that in terms of auditing local authorities in this current year. The position has been incredibly difficult throughout the previous couple of years. Restrictions and problems that were exacerbated by the COVID pandemic and the delays that's impacted upon a number of our audits. And it continues to knock on. With increasing requirements from our regulators in terms of the amount of work we have to do, difficulties in recruiting and retaining staff in the current environment that's been experienced throughout the profession. We have a significant backlog in the delivery of local public audits. I believe that the latest figures of the delivery from the 2021 audits, so this is nationally, not just EY, was 55%. That's including a number of national issues on items such as infrastructure assets, which are causing very difficult problems. So I'm aware, but the position from Ernst & Young at the moment is I just do not have the staff with trying to clear the previous backlogs to be able to do it any earlier. I could offer something that would be later, but I don't think later would be any better, to be honest. I think you would rather have your audit. Well, we've spoken to Ms. Keys and Mr. Botham about the timing, acknowledging it's not ideal. That this is the earliest we can do it, and the agreement, yeah, that's not ideal. We understand and we will work around that. But later would be worse because that will be so far down the line that a number of issues would, while they're probably not going to be fresh in September, they will be even fresh if we pushed it back to March. So yes, I acknowledge the problem, but at the moment I just do not have the staff to be able to do it. Until we can try and work through some of those backlog issues, or can do is try and bring this incrementally, and that is what we're attempting to do. So in terms of the work programme and the audit plan, there is limited difference compared to previous years. So I was just going to focus very much on presenting the executive summary and then leave it open to questions for the committee. And I guess the only real thing I wanted to highlight from the executive summary was while the issues we have within the plan have a degree of no change in risk or focus, being the summary, we have taken a few items out that were in the previous plan. So in the previous years, we had potential risk of fraud in revenue expenditure and recognition from the compensation scheme for lost sales fees and charges. And now, because we don't believe that the income received by the council from that scheme is going to be material this year, therefore we've taken that risk out. We also found last year that was well supported by the council, good quality records in terms of meeting the department's requirements for submitting their claims onto that scheme. So again, we've taken that into account, so we risk out. In the previous year, we also had a risk on accounting for COVID-19 grants. So these were all the grants you had to administer during the pandemic. We had no significant findings in the year. The grants, again, have gone down in terms of volume, although in terms of values, there are quite still a number of grants going through to helping out the local community. But then taken again, those factors together, a good track record of accounting for it. Less grants, more experience, we've taken that risk out as well comparatively. So we're essentially back to what appears much more like a normal year, looking at the general risks around fraud and error, which we have to every audit, the estimates within your accounts, which would be the valuation of land and building, particularly on the investment property. So that was a presentation introduction I wanted to give, and instead I'll be questions the members may have on.
Thank you, Mr. Souter. Questions? Councillor Godfrey.
Officers advise me when about progress on the CSAA handling of the additional audit fee.
So we've discussed that with officers and we've submitted it into the PSAA with.
Yeah, is this? As Mr. Souter said, the paper is largely the same as last year. The point I raised is exactly the same as last year. Why is it taking so long, and what's the likely outcome we should expect?
Do we have anyone who can actually respond?
I mean, Chair, we don't have any more information about that. It sits with AA. They are looking at it as a whole, nationally, across all of the submissions. And there was the complication basing of the fee over and above fee. So we don't have any further.
Okay. Any other questions? I have one specific.
Your page 27 of the report refers to the fact that you've yet to complete your detailed VFM planning and plan to update the next Audit and Governance Committee on the outcome of the planning and your plan response to any additional identified risks. Your audit plan on page 30 doesn't refer to reporting to this September meeting of this committee. Is that when you are planning to do so? Can we reflect that fact in your plan, and then we can add it to our agenda to reflect that that's yet another item for our September meeting?
Yeah, that's not a problem at all. We had stated, well, while we haven't completed the detail, we have started. It's not a case of we haven't done anything. We haven't identified any risks. We don't think we're likely to identify risks. That's our current view. But I would be more than happy to bring it back to the September item, to your September committee, either to confirm that position or to clarify whether we have identified the risk.
Whether it requires actually attend the committee, I'm doubts, but it would be very helpful to have. Very specifically, I have a question on valuations of land and buildings, because you have it identified as a significant risk, and I'd like to understand why that's significant. I understand within the private sector why valuations could be very, because they're huge, particularly if they're substantial assets within an organisation that will affect share prices and affect all. But a variation, having two separate valuations, just strikes me as double counting and an unnecessary risk here, because valuations move every year. No intention, this council, of selling huge amounts of those assets, and so I fail to understand it being more than an exercise of giving a role for EY valuers and more expense, because to me it's not a significant risk. So I would like to hear the rationale behind that.
Yes, I fully understand the context. The FRC would fundamentally disagree with you. And unfortunately, the FRC are those that set the rules and the auditing standards. FRC being the Financial Reporting Council. They don't take a distinction between the valuation and the work we have to do in a company or a local authority or in any other setting. We are required to do the work we have set out in the what we will do column, which is to evaluate the capability and objectivity of the council's valuers, the scope of the work, etc., as we have put out. So this is a regulatory requirement or something we have to do. Now, the numbers are incredibly large. Issue is that there is a lot of professional estimation going on, and with that involves some degree of judgment and uncertainty. It wouldn't take very much in terms of a slight difference of agreement or an error in some of the supporting data that was used, disagreements on the yield figures, for example, or that for a difference to become material. Hence, that's why we call it a significant risk, because it wouldn't take very much to actually make it a significant issue for the audit. So as I say, I can appreciate the issue. This is the standards that we have to work to, and until somebody will change those standards, I'm afraid that is what we fundamentally have to do.
Ask had his hand up first, and then Councillor Miller.
I did, thank you, Chair. This is probably an education question as much as anything. On 19, risk. Pension liability valuation comes in at lowest probability of occurrence, so low compared to the others, but high in terms of impact on the financial statement. I look at 3 of the pack, a big difference between scheme liability March 21 coming in at 78 million, 22 is coming in at 61 million. So a big difference there. And I'm interested as to how you evaluate why there's that big difference in number and the impact actually is. The risk identified on 19.
The risk identified on page 19, very much a graphic. financial statement likely to be higher with an error in the pension liability. That relates to, again, to the assumptions that this actuary has to make. Within the council's disclosures in the draft financial statements, which allow information around the sensitivity, and if some of the assumptions, such as salary increase, inflation changed by a certain percentage, it demonstrates how much the impact upon the financial statements could vary by because of current uncertainty in that. So therefore, if we're looking at a minor percentage change, the impact could be a few £1 million. That's why we've identified the financial statement impact to be higher than some of the other areas. I'm looking at property, plant and equipment valuation. All change is unlikely to have such a significant impact unless it's across a consistent group of assets, such as car parks, for example. We think that's unlikely based upon the previous year's evidence and the audit procedures we've undertaken. So while the probability of occurrence might be higher, the individual impact on the financial accounts of the account. So it's not exactly a scientific representation to scale. We're just trying to convey, the potential impact, currents, just to give some sort of indication of where the things lie on those two different traffic. So hopefully that goes some way to answer the question.
Thanks, and purely as educational in terms of, and I don't know how much you can comment on page 106, but big difference year to year between valuation seems quite high probability that is going to be different again. I'm wondering why it was so different. The underlying variables might lead to it being different again. And then what is the impact? What is the consequence of liability going back to what it was previously? So going up another 18 million. What's the impact on that? Fair question.
So we haven't done the audit yet. We haven't looked at the accounts. So I just want to caveat that one. So we don't know if that's right or wrong. Hence, we're going to flag it up. I would quite actually like to flag it to turn it over to the officers in terms of what was the impact, because it's their account. One point I would make before I do that, though, is the liability in your accounts is not an exact reflection of the funding of the pension. There are two different aspects. Hopefully, we'll be able to touch on that for you.
Chair, so yes, there has been an overreduction in that's a combination of a decrease, but also an increase at £9 million. Combination of those things. So the assets in our share of the assets in up, and that's due to investment return, and the liability has down because mortality rate. Many variables. Work of the act. They are comfortable. That combined impact of our share of the asset.
I mean, that's again strikes me as another one of those areas where work is done more than once, because if it's a Hampshire pension fund is that as a whole, assumptions are correct, why specific about our share? And I shouldn't be a huge amount of work there, saying, because I presume it's been done somewhere else.
So we audit the assets of Hampshire Pension Fund to make sure the assets are correctly stated and therefore work through into your share of the assets. Hampshire Pension Fund doesn't have to account for the liabilities. Not a requirement of the pension fund. This is where the liability is reflected to the individual employer. So that aspect is separate. We have to do that here. The assumptions, we have to make sure that the general assumptions applied to the fund are correct, but we've also got to make sure they're relevant to Winchester. So if, picking out figures from just off the top of my head, if your salary increase assumption was 3%, but in your budget it was 10%, for example, that might indicate there was a little bit of a mismatch. And that's the type of question, the type of assumption we have to look at. Going back to my previous answer, but if those assumptions vary by only a small amount, they can swing quite dramatically in terms of. So we certainly have to do the liability side of the council, do the asset side at the pension fund, and then we communicate out the results of the fund audit to all the administrators so they can place reliance on that work and not have to duplicate that aspect. So we do have an ongoing process to efficiency to get.
Councillor Miller.
Sort of following up from your question about land valuations, is one of the problems for the auditors that other councillors have gone out and taken lots of risky investments and invested massively outside their area, whereas we actually over the years have been pretty cautious and kept in our area. So are we effectively paying the price for other councils taking risks outside their areas and spending lots of money that they probably don't have?
In terms of the accounting, I would say no, because I said previously, it's a auditing standard issue. You have investment properties and therefore we have to do a commensurate amount of work. When it comes to the wider issues of other councils acting in different ways to this council may have done, that would be more reflected in our value for money work. But also if they have, significantly increased portfolios, we would be doing more work there, so their fee would be bigger. So you wouldn't be paying in terms of the audit problems we might see somewhere else. So I think the quick answer is no.
Do we have any further questions? Councillor Godfrey.
Returning to the issue of a pension fund, I'm grateful for Mr. Souter's organisation in being so careful of council's assets. Perhaps he could advise us. We are one of several hundred investors in the LGPS in Hampshire. Doing an audit on the LGPS Hampshire would seem to be unnecessary unless the LGPS in Hampshire is not audited itself. They already being audited thoroughly. Why is our money at risk in the LGPS Hampshire, and the money that we have invested in West current account or long-term pooled fund, property pooled, or any of the other large repositories? Why are you not doing an audit of those organisations when our money is equally at risk as part of a pooled investment?
So each local government administering body is required to have an audit of its pension fund, an external audit. So we are the auditors of Hampshire County. We audit the fund, and at that time I'm the responsible independent that audit as well. So we audit pension funds accounts in the same way as we audit this council's accounts annually. That takes into account risks of valuation of those investments or any type of investment the pension fund has. And the pension fund is also required to have controls processes in place around assurance of the pension fund assets through its custodian, for example, through its fund managers, and through the arrangements at the council, colleagues in internal audit, for example. So hopefully that's assured you that the pension fund assets, pension fund liabilities, the entire pension fund is audited within the public sector.
so if that's the case, why do you need to do it on behalf of Winchester City Council and charge us extra for it?
Because we need to be assured that the numbers that go into your accounts are correct and an accurate reflection of liabilities and assets of Winchester City Council. But we audit the pension fund as a whole, where we can take those numbers and efficiencies through to all of the other audits where we are auditors. We'll do so we are not double counting and doing the work. We don't want to do the work twice. Our colleagues at the pension fund don't want us doing this. So we take that efficiency. But the key part of this is you have the relevant numbers in your accounts to account for your share of the assets and liabilities to come to your net. And that's the number we're focusing on.
I think we have had the answer to this twice now. Are we paying for it?
We're paying the auditors and we're paying our portion of fees of the LGPS, who are also paying the auditors.
It's still, I'm afraid it's still a statutory requirement. I would say you're not paying for it twice. We do not charge, for work we are doing twice, taking that efficiency, but you are required to have an external audit, and that is the external audit is what.
Okay, have to leave it at that point. Are there any other questions on? In which case, I think if we move to the recommendation, which is that we note the strategy, and the second point is that we approve the indicative annual audit fee to PSA approval, which we don't know what to get. Other committee agree?
One of the comments in the auditor's report on page 29 is that they also request that the Audit and Governance Committee confirm our understanding of an agreement to the materiality and reporting levels, and that's not something that's been carried into the resolution part of the paper. But are you looking for us to confirm that today?
Yeah, my apologies. I always forget this aspect. We wish you to at least understand the levels of materiality we're looking at. I've described this in sort of layman's terms as margin for error. We can't audit to the accuracy pound. Actually, the audit would take as long as it takes to all the transactions of the city. So hopefully the committee are comfortable with the levels stated here. They are consistent in terms of methodology with the previous years of how we've set those figures. 2% of your gross expenditure, as we estimated that. And we'll revisit that in terms of looking presented later on in your draft accounts. So if the committee are happy, I'm grateful for information.
Yeah, I mean, we can add that as an additional recommendation, then it may be raise the issue that there may be questions on it. Are there any other questions on the materiality, or are happy to add a recommendation that we approve the levels of materiality, confirm our understanding of? We're happy to accept that. So we're agreed on all three recommendations. Agreed? Okay, thank you very much. Thank you, Mr. Suter. I hope it wasn't too difficult getting here, and I hope it's not too difficult to get away again.
It's all right going southbound on anybody's going that direction. Northbound's the problem.
Right, okay.
And an accident between Chandler's Ford and Eastleigh, so my apologies, I am rating them before.
Thank you very much. We move to item 7, the Treasury Management outturn. Again, yeah. Gemma from Council Investments and Borrowing Team. Quick Councillor Power's paper again, I think. Does she wish to introduce it, or should I hand straight to Gemma to comment on
Straight to Gemma, please.
Thank you, Chairman. Evening, everybody. Excuse me. So this report meets SIPFA's requirement to publish an annual Treasury outturn report, as it provides an update of the performance of the Treasury management function during 2021-22. All Treasury activity has complied with the Council's Treasury management strategy and investment strategy for 21-22, and all relevant statute guidance and accounting standards. In addition, support in undertaking Treasury management activities has been provided by the Council's Treasury advisors, Arling Grace. I wasn't planning on saying too much. I was just going to highlight a few bits and then answer questions. So table 1 on page 59 of your pack shows that during 21-22, the capital financing requirement rose by £9 million due to the capital programme. However, no additional external borrowing has been taken to fund this. Total investment balances have increased by £23.7 million as at the 31st of March 2022 in comparison to 12 months earlier, due to the receipt of grant and an increase in the capital receipts reserve. Table 4 on page 62 of your pack shows the investment portfolio at the 31st of March 2022, also in comparison to 12 months earlier. Apologies, the total movement has somehow dropped out of the table at the bottom, but this should be an increase of £19.83 million. Due to the lack in availability of appropriate longer-term investments, the increased investment balances were invested in shorter-term investments. By doing so, the team took the opportunity to invest further into more secure government investments. In delivering investment returns, the Council has operated against a backdrop in which the UK bank rate was 0.1% from March 2020, with rises in the final 4 months of 21-22. UK base rate was 0.75% as at the 31st of March 2022. That was all I was planning to highlight, but I'm happy to answer any questions if there are any.
Thank you very much. Questions? Have any questions? Detail, and I'm sorry you've had to come all this way with no questions, but the quality of the report. Okay, so our recommendation is to note the Treasury outturn report. Are we happy to note that? Very much, Gemma. Move to item 10, draft annual financial report 21-22. Again, Power's name is at the top of it. She may wish to comment, otherwise I'll ask Mrs. Keys to.
Again, very briefly, Chairman, I'm always very impressed that staff manage to produce an annual report which conveys to the public what we do with their money. Bringing public sector accounts into a digestible and manageable and intelligible form is always an achievement. I'm very grateful.
Thank you, Chair. So these are the draft financial statements. They haven't been audited yet, and they are due to be published by the end of July. So they will be published on our internet site very shortly. There is no requirement for the audit committee to do anything or approve anything at this stage. They will come back to you once they have been audited for their publication. So I'm happy to answer any questions, but at this stage, purely for committee and ahead of approving them, we will do a training session and members of Audit and Governance Committee through the document and try and make them accessible
Thank you, Liz. Questions? Do you have any questions? I know that Councillor Bronx detailed narrative state. I think your response was that to form the final account after. Are there any other comments? Anything anyone wishes to raise? Councillor Godfrey.
England, I grateful that we doctrine today.
Any further comments? Councillor Krusk.
Just a light comment, if I may. But there's lots to read, very nicely able to read though. It amused on page 96 that it looks like we wanted 115 trees that are solar powered, part of the Vortex Park and Ride, which I suggest was greenwashing, but not. Maybe it's my misreading of text, but I did find that quite amusing, so thank you.
Trees are solar powered.
Exactly.
Are there any further comments? Recommendation is we note the report and take the opportunity to discuss the contents, which we have had the opportunity to, but to raise anything further. So are we happy to agree with the recommendation? Oh, Councillor Krusk.
Yeah, it's just really, I think the question I had, or just to reiterate the observation around pension liability, that is something that I hope the auditors confirm. It does seem a big variation, and if there is I didn't quite understand, or I'm still thinking through what is the impact on the council by such a big swing. You know, it was one way this year, it could quite easily go back the other way if we think about inflation, CPI. That's going to have a negative impact, I would imagine. And I'm not got my head around what we need to do as a council to the right, do we, an increase in liability. So if liability swings the other way next year, what do we have to do to compensate for that, to address that issue? Because it's a big liability. I think it's on the numbers. It's bigger sizes are investment property. Like we're running our investment property to underwrite the pension scheme, which are only going to get worse in future years, and increasingly more and more of the council's income is going to be pulled into the pension scheme. But it feels like a long-term risk. There's nothing we can do about it, but it's just something I'm aware of.
Yeah, Chair, it is. It's a big, scary number, but it's not a liability that the council is going to have to settle short term. So, as you say, it's a long-term liability. So the immediate risk to the council of that liability is not something to be concerned about, despite the magnitude as it looks on our balance sheet. So the pension fund undergoes the triennial valuation, and that informs cost to the council that we pay for our employees. So that's the number that has a real impact on the cost of the council. The liabilities it sits on the balance sheet is not something, because of the nature of it, it's not something that we need to settle immediately. So it does swing because it's based on all of those assumptions and factors, which are based on, you know, economic factors outside of our.
Thank you. That was very clear. If I think about our workforce, there's a good number reaching retirement age soon. Will that have an impact on actual liability and actual spend?
So the cross section of people who are employees versus cross section of people who are pensioners in the scheme is something that the actuaries look at when they're doing their calculations. It's not of an immediate concern from a pension fund point of view or our share of that liability, but I can get some more detail for the committee if you'd like to.
Again, that could be another.
Just I think that may well be helpful for the committee, but just a brief comment to build on the points that Ms. Keys was making. We saw in recent years a reduction in our contribution, didn't we, as a result of the work of the actuaries. Over a 3-year period, when we were establishing our medium-term financial strategy, we took a cautious view that wouldn't continue. So we reduced the commitment for 3 years, but for the following years, we reverted back to the original spend. That has proved to be slightly overcautious, and that actually, but that's how we can manage that the impact on the council's longer-term finances. It's just by the assumptions that we make in the medium-term financial strategy around contributions to the pension fund and how that may change over time. Like I said, we tend to take a cautious view based on the information that's provided by the actuary at the time.
Yeah, might I suggest that we make that fairly clear in the medium-term financial strategy. I don't know if there's further on that, but Councillor Miller's got a question.
I think it's the same sort of point, because last time we had a presentation on the age of our workforce, and a lot of them weren't that far from pension age. So this risk surely is becoming quite significant, not immediately, but 5-10 years' time for this council.
Yeah, I was under the impression from the response that that is taken into account by the actuaries anyway, the profile of workforce and the profile of the pensioners that we have, and that all feeds into it. Yeah, I mean, it may be worth us having a briefing note on that fits in either when we come to the medium financial strategy, so that helps them, and if it's pre-prepared, it would be just a thing to have there as an additional piece of information for everybody. Welcome.
Can I just ask you, it might be in here, but I can't find it now, but what is the percentage of the shortfall of the total liabilities that we have?
Isn't it? Long-term liabilities are in here as 234,000, and the scheme liabilities are in at 60, so it's about a quarter of the long-term liability. Would that be correct? It's the long-term borrowings, the big bit, and grants and contributions in advance is a fairly small bit. Okay, now I'm very conscious of this because this is the second time it's happened, is that when I've said, shall we note the recommendations or agree the recommendations, that is the point at which questions suddenly come. So at the next paper, when I reach that point, I'm going to say, are there any more questions? And when I move to recommendations, there will be no more questions, okay? So get them ready in advance. Are we happy? Agree the recommendations. Right, we'll move on to the internal auditor's report. Anthony.
Thank you, Chairman. Good evening, members. It's a requirement under the public sector internal audit standards that each year we bring to you an annual report and opinion which you can use to help inform your annual governance statements. I'll just talk you through some of the main parts of the reports, and the numbers have jumped hugely after the statement of accounts. So I believe it's agenda page 188. Which gives my opinion for the year in respect of 2021-22. As always, it's a three-part opinion. So firstly, I'm satisfied that sufficient work's been undertaken to allow me to form a reasonable conclusion on the adequacy and effectiveness of the internal control environment. In my opinion, the frameworks of governance, risk management and control are reasonable, and generally audit found those to be working in practice, but if any issues are identified, we always work with the management team to agree appropriate actions to resolve the issues and timescales for improvement. Now, my opinion is based on 189, that 23% of the reviews, which was 3 audit reviews, concluded with substantial assurance. 69%, which is 9 reviews, was reasonable assurance. Just 1 review, which contributed 8%, was limited. And I'm really pleased to note there were no assurance reviews to bring to your attention. Moving on, what we've tried to do is separate out over the next few pages a little bit more detail in regards to governance arrangements, risk management in particular, and also control. So, for example, with governance, just to give you a little bit of a flavour of the sort of things that we generally consider as part of all of our reviews, that obviously builds up to the element of governance that I need to comment on. Risk management, we reviewed specifically in relation to 21-22, which was a reasonable assurance opinion, but then it's a little bit wider than just your risk management arrangements. We consider all risks when we're undertaking our audit reviews. As I said, controls are generally found to be operating well. There was 1 review, as I mentioned, which was limited assurance, which was disabled facilities grant. A brief summary of that is provided for you, pages 192 through to 193. That was previously discussed at the March committee, so hopefully there's no new questions on that area. Page 194 reflects that there are no disclosures and non-conformance that I need to report. So that reflects on our service rather than on yourselves. And just finally, our audit performance for the year is reflected on page 195. So we've got a target delivery of 95%. Obviously, we're just 1% short of that. Just represents 1 review. Our customer satisfaction survey, which was based upon a survey that this committee was included on back in April this year, was both 99%, well above our target of 90% for the council specifically, but also is an average across all of our partners. And we were fully compliant with the public sector internal audit standards for 21-22. And just finally, I'd just like to thank Liz, team and everyone else for all of their work. It's been a couple of really challenging years, and internal audit isn't always the most welcome thing when officers are under pressure, but obviously we can't do our job without those helping us. So I'd like to extend my thanks to all officers and the team. And just finally, a very brief summary of each of the individual audit reviews and the opinion attributed to those reviews, and just sort of 2 or 3 lines about what was found, what was identified. It's just provided for you in the appendix. I'll pause there, Chairman.
Thank you, Anthony. Very run through of the key points. Questions?
Page 190 of your report, just the paragraph above governance. The one prior to that referred to the council's section 151 officer and the monitoring officers having requested that some of your reviews were deferred. And then you say that in the final paragraph of that bit. You're satisfied that sufficient work did enable you to form a reasonable conclusion, or a conclusion of the reasonableness of the governance arrangements. But what concerns me is the next sentence, which says, however, the absence of such assurance for a second year may affect your ability. Well, there's a conflict there, because if there's an absence for a second year, then it was absent in the first year. And you said that there was sufficient to enable you to form a view. But what I'm particularly concerned about is that I and this committee understands just how important it is to you now that there is no slippage whatsoever in this year's plan, because I would hate at the end of this year not to have sufficient audits completed, not just in progress and pending the finalisation of reports, which there tends often to be a lagging, because at this time next year we don't want to find ourselves facing your opinion that you are unable to form a reasonable opinion because of problems 2 years in a row. So could you just clarify what I'm supposed to understand by that paragraph, please?
Certainly, of course, and this again was previously reported back to the committee in March when those plan revisions came. It is a one-off exercise, and it's part of the discussions with Lisa and Richard and Liz. It's a one-off exercise because of the pressures on offers. It felt appropriate to defer those reviews and include them in future years' provision. Now, that wasn't a request that was made lightly, and it wasn't a decision that was made by myself lightly as well. It's the agreed audit plan, which is 310 review days a year, is based upon giving good assurance across a 3-year period over the majority of the sort of significant areas to the council. So any longer term dilution of that audit coverage would start to prevent my ability to give a conclusion based upon the risk parameters that have been set, you know, the bar that we've set by giving that the audit plan of 310 days. It used to be 453, and we agreed that that was excessive a few years ago, and we did reduce it quite considerably. So clearly we can't cover everything every year. It wouldn't be cost effective for you to do so. So a short-term reduction in that assurance to then be covered by future years, I was relatively comfortable with. If I need over a longer-term basis to give the level of assurance on the entire framework of governance, risk management and control, clearly that would be jeopardised if we don't do sufficient work in future years. But it's a one-off exercise, given how stable the council is, given there was just one limited assurance review, given how our sort of risk management is covered in generally through our audit work, how the organisation's governed, it felt appropriate to agree to that 1-year reduction.
If I may just, so you were happy with that reduction last year, and you're happy that this year's plan will, if completed, will give you the necessary level of groundwork to enable you to form a view on this year's governance. So I hope you won't mind us at each quarterly review seeking that assurance that you're still able to form an opinion for us, because we'll accept the outcome of your work, but to find that it's not being carried out would be a catastrophe.
Absolutely, and it's part of my requirement as part of the progress reports to bring any items of concern to your attention. That includes any limitations on our scope or our ability to complete the work, either internally or because we're not getting the access to officers, and that's enshrined in the internal audit charter as well, that's formally approved in advance of each year. It's previously covered again back in the March papers.
The bottom.
This is probably an educational question. Okay. I noticed in your opening paragraph about your role and what your purpose is in terms of adding value and improve on organisations' operations. And I wondered to what extent you look at service provision. I'm thinking particularly that my inbox is full of planning issues, massive delays in providing a service on the planning side. And if I read this report and the audit, the sort of global takeaway is that this all looks pretty model council. And I know that there's problems and I don't see them.
So we're looking at the underlying processes, the frameworks of governance, risk management and control. So essentially how well those services and underlying systems are run. Now, part of that consideration and one of the general things that we normally include under governance is, are there key performance indicators? How is your performance being managed? Who is that being reported to? So whether you have particular challenges for whatever reason, be it financial resources available or staffing issues, we would expect to see that reflected in the performance dashboards that go to the relevant committees that oversee those areas. So it wouldn't be our place to say whether or not you have sufficient or enough resources to undertake your activity. It would be whether or not those issues, if there are any, are being clearly and transparently reported up to those who are in a position to do something about it.
Thank you, but could somebody tell me where we find out that?
Yeah, what you'll find is on the quarterly monitoring that goes to the performance panel. It's available for everyone to see. It's a published document, quarterly performance monitoring report. And any councillor should be able to talk to the. So when the performance panel papers are published, that's a good time to look at them. It's worth going back and looking at the others as a new councillor, I think. And if you're enthusiastic enough to be part of scrutiny and go through that paper, it is quite a lengthy paper. Councillor Horrell chairs that panel, so maybe of use. Have a look at that. Yeah, it's do with the scrutiny process, and this is the point I was making to Councillor Godfrey earlier. We just need to be clear as to where certain things lie. We're about process rather than delivery, I think. And so that's more a scrutiny function.
If I can just add one further point as well, just referring back to agenda page 197, and one of the reviews that concluded with a substantial assurance opinion was in and around strategic planning and performance management. So within that review, we would have specifically been looking at the overall council plan, all of the underlying strategies and the reporting mechanisms to show where you are in terms of delivering those areas. So that would have included all performance dashboards. So again, whether or not a particular service is achieving the exact levels and time scales that you would want it to achieve and what they intended to achieve would have been adequately reflected. So if there are issues, it will be appearing in those relevant performance dashboards.
Thank you. Do we have any further questions on the paper? Oh, Councillor Godfrey.
One for Mr. Harvey. I would observe on your comment about the planning. Problems with the planning department are due to process, not to people's individual performance. I would think, therefore, we ought to understand where the process is going wrong when a performance problem is indicated. And if we are looking at process, we should be the body to consider that. But worth considering that within the remit of future report. However, returning to the report before this evening, Mr. Harvey, you have always come to this committee and done your job excellently in matters to smooth the furrowed brows of worried councillors. And we are always reassured by the report and professionalism that you and your team bring to this important function. However, you're always very careful to remind us that your resources available to you to perform these tasks are always going to be limited. If you had more resource in this last financial year, 21-22, which review area would you have put those resources to?
I don't feel our resources are limited with being able to give reasonable assurance over a 3-year cycle. As I say previously, when Winchester City Council first joined the partnership, the audit plan was set at 453. Quite historic reasons. I think essentially it was to match the cost of your existing team and what that would equate to on a straight match day-to-day basis. So it wasn't a cost or efficiency saving by coming across, it just gave you a more resilient service. After having that level plan provision for a period of 4 years, I think it may have been, we just felt we were doing things for the sake of it because the days were there, and actually by systematically going through all service areas and looking at certain service areas on a more frequent basis or a less frequent basis, it seemed 453 days was excessive, and we were literally doing things for the sake of it. So again, we can't possibly cover everything every year. If you did, it would be excessive, it would be cost prohibitive, it would get in the way of planners being able to plan. So it feels it's an appropriate level. Should, as an organisation, you wish to set the risk appetite at a higher level and get less assurance because there's areas you're less worried about, that may be something that I would feel I would need to draw to your attention and basically say, well, we can only cover these areas. But it certainly feels that we're covering, you know, risk management on a regular basis, performance management on a regular basis, business continuity. You've had 4 or 5 IT reviews in the year, which for a district and borough council compared to obviously counties is quite a good level of assurance across the board. I don't, where we risk assess the audit plan each year, and we have the ability to flex the audit plan each year and bring reviews in either for additional days or if a less of a priority review drops off the bottom, so to speak. If there were particular areas of concern that I was insistent we did look at in that year, then we would have looked at it. So I'm very comfortable with the level of coverage there has been. And again, just reflecting on Councillor Bronk's points and some of those reviews that we didn't cover, there areas, I think there was climate emergency and various things that are a significant priority to the council, so you will want assurance in those areas. But actually, whether you got assurance in 21-22 or get it in 22-23, given the long-term nature of those areas, again, I was comfortable with those variations, and for those service areas we didn't look at, but are included in the plan for this year. But hopefully, whilst we're there to give obviously the advice to officers and how things could be improved, one of our, again, our primary role is to give yourselves the independent assurance that what officers are telling you is true and fair.
And fundamentally, if we had a whole series of limited opinions, you might be coming back.
absolutely, and those areas would be looked at more frequently. So, for example, with the one review that we did have last year that concluded with limited assurance, which was disabled facilities grants, I noted in the report that comes to the last committee that the team is making significant progress in addressing those issues, and that is formally reflected in the plan for 22-23 that we will look at that area. And if, again, looking back at the plan that was agreed back in March, you'll see all of those areas where we were asked to defer those reviews because, again, we feel they're areas of significance for the council. They are reflected in the 22-23 plan.
Thank you very much, Anthony. Are there any other questions? Are there any other comments from both more? Please add anything? Right, well, at this point, I move to the recommendations. I will just say once again, are there any more questions? Right, no. Okay, we will just try and remember what we've got to do at this stage. The Audit and Governance Committee noted the Chief Internal Auditor's annual report and opinion for 2021. Are you happy to agree? Thank you very much, Anthony. Always appreciated. Present things very, very clearly to us and put up with lengthy meetings from time to time. Thank you. We'll move on to item 12, which is a certification of claims and returns annual report. Terry Horner's here for any answer any questions perhaps on that. Councillor Krask feels that employment by KPMG means that he should leave the room. Starts on page 201. Councillor Power, have you got anything, comments to make on them?
Chairman, I would be grateful if the committee recognised the pressure the benefits team has been under over the distributing vast amounts of money under difficult to assess criteria. Appreciated that in your comments. Thank you.
So, paper before us, I think, fundamentally says there are no problems. Is it as simple as that? Terry, did you want to make any comment?
Not in particular, no. I think everything's in the report itself, so I think it's quite self-explanatory. It's a short report from the auditors. We do refer to 3 errors in there. They're small errors. They've had no financial impact overall on the claim itself. So we feel that the errors are within the limitations of what we actually do, and would be you would expect a number of errors anyway, small and of no significance. So I don't think there's anything particular I wanted to add.
Thank you. Questions? Questions on this report?
Congratulations. A couple of years ago, we were hearing of repeated errors from one year to another, and the fact that you only have 3 immaterial ones, I think is an excellent result. So, well done.
Thank you very much. Much appreciated.
Any further comments from committee members? Well, I'd like to add to that, to Councillor Power's words, because I know the last couple of years, well, since the beginning of the pandemic, the huge pressure that the revenue, all the additional work with the COVID grants, along with still implementing the day-to-day, which is quite busy in itself, and certainly business rates got incredibly complicated over the last rates and things. So I think it's a magnificent effort to actually, your bread and butter day-to-day things, no slippage at all, really. In fact, a very good report. So on behalf of the committee, I'd like to thank you for what the team have been doing.
Thank you very much, Chairman. I'll accept that on behalf of the team. Obviously, it's a bunch of people that are not here today that deal with that, and they've done some amazing work over the last couple of years. So I think it was a tremendous effort to just come out with this in that particular time. So thank you very much.
We'll move to the recommendations of the report. The Audit and Governance Committee considers it, which I think we have considered. That's it. So we have considered. Thank you very much, Terry, for sitting through the last hour of this brief 5 minutes.
Absolute pleasure. Thank you.
And we move to item 13, governance statement. Sorry? Oh, yes, yeah, we better have that. Well spotted. Important to have a good left-hand chairman. So the annual governance statement, again, Councillor Power, do you have any comments to make? And then I'll ask.
Nothing from me, thank you.
We also have Simon Houston online for any questions.
Thank you, Chair. Yeah, this report comes to the committee at this time every year. It's the annual governance statement is the statutory document that all councils need to prepare, and the report sets out the process that we've gone through in putting this work together. So the staff that have been involved and how that's been framed. The previous statement focused on two particular areas. For action, and that was the partnership working and equality impact assessments. We made good progress with both of those areas over the last year. We now have formally approved the process for the equality impact assessment policy. Partnership working, the work to address all of the activities that were identified in the audit review the year before last. It's still in train, but the key areas of that work have progressed well. So we're not proposing that be included in the statement for this year. Three areas that we do want to bring to the committee's attention, which some of you will already be aware of. They're highlighted in section 11.14. So that this is the substantive change to the annual governance statement for this year. And that includes the actions in relation to records retention and disposal, programme and project management, and disabled facilities grants, which the previous report has already referenced. The programme and project management audit is still in draft form, so it hasn't been included in governance statements in the quarterly reports that have come to this committee so far. But we do feel the actions in there are such that we need to make sure that we give due attention to that work. So we've included it in the actions, and that's around making sure that we're consistent in our approach to programme management and the way we manage major projects. We've done a lot of work in that area, a lot of resource in that area. So it's really important we get that right, I think. Won't say anything more, Chair. Simon Houston is with us online. He has put the majority of the work into putting this statement together and coordinating the work of officers. So happy to take any questions, but I may well defer to Simon.
Thank you, Richard. Questions? Bronk?
A couple of years ago, I drew to the attention of the committee a number of typos or the wrong reference to the name of this committee. It was referred to as the Audit Committee, and that's something that occurs in the paper before us. So I had been quite disappointed when I read this, but I looked back into the accounts, and the amendments that I'd requested a couple of years ago are reflected in the governance statement in the draft accounts. So somewhere along the lines, we've landed up with a draft that Liz Keys has been working to, and maybe a slightly different version that's been adapted for the purposes of our considering the government's statement. So I'm very happy that the small amendments that were made for just either cosmetic or accuracy purposes are not, substantial and will undermine our ability to approve it. But if I can ask there to be some reconciliation between the versions in order not to have wasted the work of the past, because I'd like to continue to run with the one that's on page about 162 or whatever of the draft financial report. The one thing that I did want to mention that had been a concern of mine is we've reflected the fact that we are going to pay very close attention to the conclusion of the outstanding points for the audit that raised concerns. But what is of major concern to me is that we also ensure, which we have the means of doing through via our, the quarterly reports to us, that the internal audit cycle this year doesn't give rise to the concern that's referred to on page 190 of the auditor's report. I think it's so important that we don't allow any slippage, or that we address any concerns of the section 151 officer or the monitoring officer about the capacity of staff to assist with audits, and knowing of staff changes at a serious senior level, that's very foreseeable that there could be difficulties. I just like to note somehow in the text that we are mindful of the need to maintain the audit programme, and that we have the means of doing so, and that it's part of that action list to ensure that all key staff are aware of the importance of internal audit for this year, so that they are in a position to form a conclusion rather than say their work was hampered, and as a consequence they've run for 2 years without the means of forming an opinion, and us having to face a conclusion that we're not happy with. Thank you.
Thank you. Richard, do you want to respond to that?
Yeah, on that first point, apologies if there's been previous amendments that have been missed off this version. It is a draft, so we can make sure they are reflected. So we'll do a reconciliation between the two to pick up on that. If I could defer to Mr. Howson, though, for a comment on whether the statement itself needs to be adapted to reflect the points that Councillor Bronk has raised.
Thank you, Richard, and welcome, councillors. I think it's a valid point. The essence of the annual governance statement is looking at governance issues. We actually pay quite a bit of reliance, if you like, on the internal audit reviews that are undertaken during the year, and particular focus on significant weaknesses and those audit reports that offer a limited assurance opinion. And I think fundamental to that is the completion of the audits as set out in the audit plan. And if we do have deferred internal audits, obviously that undermines the integrity of the work that's being done. So I think I concur completely that as officers, we need to ensure that those audits are done and that the audit actions are very much followed up. We report quarterly to the Audit and Governance Committee with a progress update on the internal audit actions, particular focus on the overdue internal audit actions, as well as an update on the actions that respond to the issues in the annual governance statement. And we can certainly go back to officers and emphasise the significance of those pieces of work.
Yeah, I think the specific concern here really is around the fact that we haven't had sight of that programme and project management audit because it's been delayed, and it's been included without. I'm not questioning as to whether it's relevant to include it, but in an ideal world, it would have already come to the so that we know that we're approving a statement of something that needs to be done. So but I think that may be partly due to the.
Jeff, yeah, point well made. And it was something that we were very conscious of, obviously, in drafting of the statement itself. We felt the statement would be lacking if we hadn't included it, and that's the reason why we've done that, and the actions set out in the action plan sort of highlight the key areas of work. We'll obviously see. You should see that report in the Q1 monitoring report that comes through, but. We felt there would be too big a gap in the statement that from the work done from in preparing the statement to miss it out at this stage. So that's the reason it's been included. I think adding a sentence to the key role of internal audit to reflect the point that Councillor Bronk made about the importance of this year's programme. I think we can add that sentence to the end of 7.8, and that would reflect the point I think that you're raising as well.
Do we have any further questions, Councillor Lane?
Yeah, I just want to come back to the programme and project management. As you know, that I'm quite concerned with the way that we manage some of our projects. We need to get standardisation and going through on this. Will we actually have a chance to go through that and to kind of this committee?
I think Richard made the point that it will. It's in draft form at the moment. It's just not reached that stage of publication. So it will be in the September meeting on the Q1 governance monitoring report, and we'll have an opportunity to have a detailed discussion around that.
Yeah, I'm happy with that. I just wanted to draw the attention that I think is extremely important the way that we're looking at. Haven't done for a number of years.
Yeah, one of the key actions in relation to that work is a report that actually Mr. House has drafted himself. That's coming to the leadership team in the next few weeks to consider proposals for any amendments to that process. But we will add commentary to the reports in September to give the committee some reassurance on the work that's going on there.
Thank you, Chair. If I just carry on those lines, I know Councillor Godfrey is particularly interested in this as well, that when we've done our business plan, completed our project, we should actually do a completion survey to make sure that it's conformed in certain bounds of the business plan, because we don't seem to be able to do that in any of the projects.
Chair, it has always formed part of the project management process, but it's been inconsistently applied in the past, and I would accept that point. We have addressed that point specifically within the last year, and we have seen end of project reports on all key projects now coming through first an officer programme board and then reported through to the performance panel and onto scrutiny. So that's the route that's now following. So I'm able to give some reassurance to members that discipline is now back on track. Was certainly given a very positive, a good challenge and a positive review by the performance panel, and future reports from projects will all follow that route.
Thank you.
Yeah, I do think that there is having had the conversation with Councillor Laming, there are almost two separate things, and an example is perhaps the leisure centre, where the project will be complete and a review will be taken at once. But actually it's the ongoing performance against the business plan, which is sort of almost outside of the project. It's part of the longer term management, is also something that perhaps in some cases we need to be doing. In other cases we wouldn't need to do it. But it may be true of Voltex as well. Business plan, presumably based on the amount of use it would get, income. The project ends, and so the review of the project has taken. Ongoing comparison with the projections might be something that might be worth looking at. don't want to have the debate we'll have about this next time, but just a point that I think Councillor Laming has raised with me a few times, and something that we perhaps can consider when we look at this next meeting.
Yeah, Chair, yeah, no, I accept the point. At the moment, the discipline that we've reintroduced is around making sure that all end of project reports get reviewed through the process that I've outlined. That wouldn't necessarily pick up compliance against business cases over time, and I think how we can think about how we best reflect that as part of this work on programme management.
Any further questions? To approve, in this case, rather than note the annual governance statement. Inclusion in the draft.
Chair, do you want to see an amendment to that recommendation to approve, subject to the addition of the additional sentence regarding the internal audit process?
Sorry, and reflection of the amendments to the code made in previous years. Thank you.
So I'm not sure if that comes under the issues arising in proposed actions noted, but also we add into it two. Yes, we'll make it a third recommendation. This is the inconsistency between the two drafts, effectively, and also the additional sentence. Are we happy with that? Good, that's agreed. Sorry, we reached the end of the agenda. Thank you all for attending. Thank you for contributions.